Manufacturing Fund. Will the returns you get from investing in this fund help in your wealth creation process in the long run or not? Let us find out through an in-depth analysis in this video. Hi, welcome to holisticinvestment.in. We help individual investors like you to make the right financial and investment decisions to reach your financial goals in a more faster and smarter way. So before analyzing this fund, let us first understand a few basic details about this NFO. So the NFO, it opens on 25th July 2024 and is open until 8th August 2024. And some of its key features are it belongs to the category of thematic equity scheme manufacturer. And it is also an open-ended fund type and it has Nifty India Manufacturing TRI as its benchmark. And the minimum amount you need to start investing in this fund is just 1000 rupees. And the fund managers for the Invesco India Manufacturing Fund NFO are Mr. Amit Ganatra and Mr. Dimant Kotari. And the exit load for this NFO is just 0.5% if redeemed within 3 months. So now let us understand the investment philosophy and the objective of this fund. So its investment philosophy is it aims to invest from a diversified portfolio of equity and equity related instruments of companies which follows the manufacturing theme. And its investment objective is also to provide long-term capital appreciation to its investors from a diversified portfolio of equity and equity-related instruments of companies which follows the manufacturing theme. So this is its ideal investment objective and philosophy. So now let's move on to analyzing whether the returns you get from this fund or whether investing in this fund will be worth it in the long run or not. How we are going to do is by analyzing the pros and cons of investing in this fund. First, let's take a look at the pros. So first, the pros of investing is that the fund is diversified among the top performing companies which follows the manufacturing theme in this economy between various sectors and stocks. And also, if you are an investor who's seeking for allocation to the manufacturing theme, then this fund might be a suitable fit for your investment portfolio. And also, if the new trends and the emerging sectors performs and delivers well, it will definitely boost the returns in your overall investment portfolio, because this fund follows the high risk and high return concept, which means that more the risk, more the potential for high returns. And also, this might be suitable for an aggressive investor who's willing to take a lot of risk, because this fund already follows the high risk and high return concept. So if you're an aggressive investor who's bullish on the manufacturing theme, then this fund might be more suitable option for your investment portfolio. So these are some of the pros which you need to consider before choosing to invest in this fund. So just as we have understood the pros, it's also equally important to understand the cons of investing in this fund, because the cons reveals the potential risk you might be undertaking by investing in this fund. So as we have already mentioned that this fund follows the high risk and high return concept, it will be very riskier for a short term investor, because when a fund follows usually an equity related fund, a high risk and high return concept, it usually means that you need to stay invested in that fund for a long term period, like for at least 7 to 10 years, because in 7 to 10 years the market cycle would have also completed and would have the potential to give you stable and potential high returns. But in a short term period, the market will be highly unpredictable, where it will go through a period of high returns, low returns, even to a point of no return, and even to the extent of giving you negative returns. So in a short term period, investing in a stock market just to achieve your short term financial goals will be highly riskier, because in short term period market is highly unpredictable. So for a short term investor, this fund will be riskier and you need to avoid investing in this fund. Also, this fund might not be suitable for your core investment portfolio, because this is just an NFO just introduced to the market. We do not know how it's going to perform. We do not know how it will perform in the highs and lows. So as we do not have the proper track record, it's a little bit riskier considering to choose this fund option to add to your core investment portfolio, because not all new trends and emerging sectors translate into stock market returns. Just because the manufacturing team is performing highly well right now in the market doesn't mean it will perform all the time, or we do not know how long it will perform. So just no, you do not need to take that risk, because if you took that risk, you may overexpose your portfolio to more negative triggers. And also, this fund is not as flexible and dynamic when compared to other diversified funds, because this revolves around just the manufacturing theme. So it can add more volatility to your investment portfolio, as it has more high concentration. Also, if this new trend and emerging sector underperforms in the market, it will definitely affect the returns in your investment portfolio. Because for a thematic fund like this, you need the proper timing, and circle of competence should be on your side. You need to know when to enter and exit from this fund to gain the potential gains from this fund. So if you do not have that kind of knowledge, it's definitely a riskier option to invest in a thematic fund like this. So these are all crucial factors you need to consider before choosing to invest in this fund. So what is the final takeaway now? Should we invest in this fund or not? Will the returns you get from this fund will be worth it or not? So from our analysis, it is evident that this is not a beginner friendly fund. So if you're a first time investor, and even if you're a conservative investor who's not willing to take a lot of risk, then they should definitely avoid investing in this fund. And also, if you still want to invest in this fund, there are other manufacturing thematic funds with good track record already available in the market. So you can choose to invest in that fund instead of an NFO like Invesco India Manufacturing Fund. And also, this fund is not suitable if you're looking for funds to add to your core investment portfolio, as we have already mentioned, because we do not have the proper track record to take a calculated risk by investing in this fund. So if you do want to invest in this fund, you can invest through like from your surplus money. So you can invest with a minimum investment just on a trial basis from your satellite portfolio, just for an experimental basis. But do not invest through your core investment portfolio, where you are investing to achieve your main financial goals. Also, if you do not know when to enter and exit from a business cycle fund to gain the potential gains from this fund, then also do not invest, because it will not be suitable for you as an investor. Especially, finally concluding whether this fund will be suitable for you or not, should you invest in it or not, all boils down to what kind of investor you are. So what it depends on your risk tolerance, your investment objective, and the time horizon in which you want to achieve your financial goals. So all that boils down to figuring out whether this fund will be a good option for your investment portfolio or not. So if you have doubts regarding that aspect, you can definitely consult a certified financial planner who will be able to compare your investment objective and the investment objective of this fund, and match and compare the risk profile of yours and the fund option you want to invest in. And will also see if what is the overlap ratio, whether it's less or more. If it's more, they will definitely suggest you not to invest in this fund, and how much allocation you need to give to this fund in order to achieve your financial goals. So they will be able to look at all kinds of angles and help you take the right financial decision to reach your financial goals in a more faster and smarter way. So they will make your investment journey more hassle free and smoother for you in the long run. So you can also consider consulting your financial planner for the suitability of investing in this fund for your investment portfolio. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to YouTube channel, so we can come up with more such financially beneficial content for you. Thank you for watching.